What's going on, traders, and welcome to 2020, and this is going to be the first episode of the Weekly Watchlist. For those of you who don't know, in the Weekly Watchlist, I do a technical analysis and give you some of my thoughts on the tickers. Up here on the left-hand side, we have SPY, the Qs, and IWM, which make up the broad market, and then we look at some companies. It's the blue chips. As always, we're looking at Apple, Netflix, Tesla, Alibaba, Facebook, Nvidia, Microsoft, and Amazon. If you're interested in receiving 5 to 10 swing trade ideas per week, then go ahead and sign up at the first link in the description. It's completely free, and I send it out every Sunday afternoon to give you an edge for the week coming ahead. If you're interested in seeing how we did in 2019, there is a video I posted to the channel with the results. We're also on Instagram if you want to follow us there for a daily scan starting back up this upcoming week. That is at tradebrigade.co, as well as we are having a Discord chat open. If you want to chat with myself and other traders in real time, go ahead and join us in there. We'd love to have you. So starting our analysis, as always, with the SPY weekly chart, you can see that we're starting to see some indecision up here at the all-time highs, which is no surprise considering we've been on a nice run here for the past few weeks. We did just come out of the holiday weeks where we had some lower volume here, as noted by this smaller bar down below. And, who really knows what's going to go on in the future here, but some indecision is not, uncommon to see after a nice run like this. Some sideways consolidation through time or even a small pullback here is certainly acceptable based on what we're looking at here on the weekly chart. If we drop to the daily, so I want to leave the daily like this just for a minute. You can see that there's still a glaring gap down below here. There's a few gaps in the chart here. Another one still here. This one is still partially filled, but I do want to note that there are still a few gaps below us, and that does leave some poor structure, so keep that in mind if any bigger move to the downside does start to happen, that those do exist and could be potential targets. I'm not saying that a huge move to the downside is going to happen, I just want to make you aware of them. You can see based on a few of these candles up here that we had a nice authoritative day to the upside on Thursday, but that was counterbalanced by a big gap down, a gap fill, and then sort of closing midway of the day's range there on Friday. That may have something to do with the bombing of the Iranian embassy or whatever happened over there. We don't really pay attention to the news. We just pay attention to the chart and look at what's happening here. So regardless of what happens in the news, we are prepared as we go into blue sky territories, which is going to be anything over 324.89. We're looking at whole and half dollar resistance as well as intraday levels that do form. You can see we do have some resistance here. Also in between mid-body of these candles, just based on the fact that that's exactly where today topped out. That's where the market topped out in the past. That level is 323.76. Anything lower than this, really, our first critical support is down here at 319.50 just about. You can see we have some key lows in here, and we really do want to see those hold. If those give, then our next target down below is at 315.46, and that pretty much covers the downside for the week ahead. So for the Qs, we can also mark in our new all-time high up here around 216.16. After that, we have a very similar story as to what was happening on SPY with some resistance midway here. You can see, obviously, that was the previous resistance, and then we got rejected over that level today at 214.56. So keep that one in mind. That will be a small battlegrounds on the way back up if we do decide to go back up. Again, it's whole and half dollars and intraday levels into blue sky territories. Down below, we have this key support here at 211.35. That's based on these three sets of lows, and then these two really starting this secondary upward bounce here. So if this one gives, I can imagine things get kind of nasty and we come back down to our next one below. That's at 206, the round number to be exact. And then our rising 50 SMA may start to catch up with that depending on how the beginning of the week plays out. So starting off on IWM, a little bit further zoomed out than the rest of them, just to give you an idea of where we are in comparison to the all-time high up here at 173.39. We're, slowly getting back up there, but still not quite as high as our other indexes. If we zoom in a bit, you can see that we have cleared this major resistance level. We have been above it and trading above it quite nicely for some time now. So right now we're looking at resistance coming into play here at 165.38. You can see that's exactly where today's action on Friday topped off. We also have a new all-time or recent swing high rather to mark into place. That's at 167, just about the nice round number there. And then resistance slightly before it here as well at 166.75. So keep that in mind should we see any sort of major swing back up to the upside. If we get any sort of rejection at this level and look to turn back around, then do know that this is our next key support down here at 162.33. You can see we have some key lows building in this area and then a couple more down here. Anything lower than that, and we could see the gap fill. We got a sort of partial gap fill here, but the gap fill to the high of this candle right here where my cursor is is at 161.65. So keep that in mind on a bigger move to the downside. 50 SMA is starting to catch up with that level. So again, if we do see some crazy action to the downside, that could be a potential target. Anything over this all-time high, as always, $1.5 into blue sky territory and intraday levels that do form. If you're enjoying the video so far, be sure to leave it a thumbs up. I genuinely would appreciate it, and I'm sure the YouTube algorithms would as well. It just goes and helps me out a bunch, and it also spreads the word of what I'm trying to share here. So the more, the merrier. If we're zooming in here on Apple, you can see that we had a nice gap up and ran on Thursday, but got rejected right at the all-time highs pretty much on Friday. So we do have the ability to draw that in there. That's at $300.60. And there is a small gap that remains below, and that gap fills somewhere around the 293.85 level. You can see that's our previous resistance, which we gapped up above, and that's kind of where we're sitting at now. So anything into blue sky territories or over $300, then we're looking at $1.5, obviously, as I always say. Anything to the downside, it's first the gap fill, and then we have support next down below at 282.65. You can see resistance, resistance, resistance. Once we were above it, this small red hammer candle here confirmed it as support. There is this tail here, which may offer a first touch bounce. Should we trade down through it, that's at 285.44. But again, I think Apple just sort of wants to consolidate and go sideways here while the market also does the same, and then maybe another move to the upside happens. This uptrend is just very strong at the moment. Again, keep in mind we have earnings coming up. That looks like it's on the 28th of January here. Netflix is still looking pretty good in my opinion. You can see that we do have the nice uptrend still forming. We are in a pullback here. We're trading back above the 200 SMA, which is this green line here, but we do have this kind of nasty inverted hammer candle right at previous resistance. So I'm not sure if that's just because the market overall had a sort of choppy day like that, or whether or not we will see a further move to the downside here. But if we can break above this trend line and get back above this resistance, then I do think Netflix does have the opportunity to go on another run here and sort of, we have these periods of uptrend, consolidation, another uptrend, consolidation, uptrend, consolidation. We could see very well the same thing. If we clear this $338.12 level, we could very well make another move up to 361.79. That's kind of pie in the sky. That's a full gap fill here. So I would just be wary of that. And if we did get a breakout over this level, just monitor it really closely and don't just put all your eggs in one basket hoping that it really does make it to this level. To the downside, we do have some protection and areas of support to look at. First one coming into play at 316.16 based on our previous resistances here, as well as back here. That should be a very key level. It looks like we also have a level of support which I can draw in here at 321.21, which happens before we get to that level. So if we give up the 200 SMA early in the week, next week, look for a move down to that 321.21 support. If that one gives, next one down at 316.16. Tesla just seems like the beast that keeps going. You can see we got another massive gap up today. It ran for a while, made a new all-time high, which we can mark in here at 454. Nice round number there. Kind of cool to see that one. But then it sold off for the rest of the day. I wouldn't be surprised with this nasty inverted hammer here to see some sideways consolidation through time or more of a pullback. In that case, we would sort of be looking for a gap fill. The high of this candle here and the gap fill close happens at $430.70. So keep that in mind if we see any negative action and reaction in the early on stages of next week. We do have earnings coming up in a couple weeks here on the 29th of January. Big green volume day though, so that's why I'm sort of thinking that we see some consolidation through time. I don't really think that it wants to sell off hard considering the massive move and big volume that's been flushing into the stock ever since this huge gap up on earnings way back here. So BABA is still making a move out of its massive symmetrical triangle that it's been breaking out of this, you can see the resistance line here for quite some time now, steadily chugging upwards. We do have a new high resistance up here at 219.98, so keep that one in mind. You can see that this level here at 218, just about the whole dollar there, did offer up some resistance today in Friday's session. We went right up to that level, kissed it, and then reversed for the day. So I don't think we necessarily see a full gap fill to the low, or the high rather, of this candle here at 213.64. Instead, I think again we might see a partial gap fill, maybe 50% of the gap, and then some consolidation through time while BABA sort of figure out what it wants to do along with the market, and then we may see another move and push up higher. Facebook has been an interesting one just because of these two trend lines that I do have drawn in here. Regardless of whether or not the stock seems to have broken out to the downside multiple times now, whether or not it gets back in, you can see it did get rejected over that trend line and then closed down just at it that day. Once we were above it, did offer some support and we moved up higher. The next day you can see the same thing. So these trend lines do seem to have some significance. You can see we're staying within it now quite nicely. We do have a couple 2 days here that have remained above the support trend line. So it should be interesting to see what happens as we run out of room here, whether or not the price will eventually break out to the upside or we'll see a reversal to the downside. We could probably adjust some of these now, but I'm just going to leave them as is because I think it's kind of funny how the stock and the price is acting. We are seeing a topping sort of wick here right at our previous resistance, so that's no surprise there. That's at 208.33. Anything higher than that, we're going to mark off our new resistance up here at 210.28. That will act as a first touch resistance, but higher than that, like I said, we are looking at 218.09 should the breakout to the upside happens. If we see the break down to the downside, we're looking for a first flush and support point to come into play down here at 203.42. You can see that's sort of where price has been rejected in the past. Resistance, 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 and then finally support here when we tested it from the top side. Should that one break down, we do have our 50 SMA sort of in between this larger area of support down below, so keep in mind that should act as a first touch bounce on any sort of touch to it. And then our next level below is at 195, the whole dollar just about. So again, that's quite a ways to the downside. I'm not saying that's exactly what's going to happen, but I do think that we are seeing some resistance in this area, so some sideways consolidation. Again, not going to be a complete surprise if that happens. We do have earnings again coming up on the 29th. So again, a lot of these earnings will happen and will affect what happens to the price of the stock as we get into and closer to those days. So NVIDIA is still in its flag, still kind of choppily respecting it. You can see we got down out of it, but then gapped up majorly to the upside and resistance portion of it, and now we're holding on to the support portion. So kind of just going to wait this one out and see what happens. I wouldn't play this one, necessarily just based on whether or not it breaks for one day. I would really want to see some confirmation that we are in a breakout to the upside or are in a breakdown to the downside. So if we do get over this resistance trend line, our next target is up here at 249, excuse me. That should offer some resistance as it has in the past. If we scroll way back, you can see boom, boom, resistance there. And then to the downside, should we see a breakdown out of this pattern, we are looking at support to come into play here. I would say it probably might come in a little bit earlier just because that's where we sort of saw a bounce start to happen from. That's at 230.41, just about somewhere in these lows. But if that gives, our next one below is at 223. Anything lower than that, and this is sort of our really key area on the chart that we want to watch out for, and that's at 211.39. So Microsoft, again, just sort of following suit with the market, does have the inverted hammer up here just below its all-time high. So we'll mark that one in. You can see, again, it coincides with our level here that we talked about at 159.55. Anything lower than this, we're looking for support to come into play around here between 157.11 and 155. There's sort of a partial gap fill that has happened here. So if we get the full gap fill, it should be a gap fill reversal, in which case we get an intraday bounce there. If that one gives, we are looking at our rising support trend line, which the price has stayed pretty close to over the course of the past few weeks. So keep that in mind as a possible entry as well if you're looking to go long on Microsoft. 50 SMA is sloping up nicely to catch up with that white dotted line. Any really major move to the downside, and we're looking at 148.51 as our next level of key support down here. To the upside, again, in blue sky territories, we're looking at whole and half dollar resistance as well as any intraday levels that do form. So last but not least, we do have Amazon. You can see that we've come right up to our $1,900 whole level mark and then sort of backed off of it. It's a pretty big solid number there, so I'm not surprised to see that happened, especially after a huge move to the upside, kind of an overextension to the upside here, if you will. Seeing some pullback here, and essentially what we want to watch for is whether or not the price will break back down into this bullish channel. If we get back down below this level, we are looking for support to kind of come in and kick in around 1851, 1850, just to play whole numbers here when we're dealing with such a large share size in terms of price per share here. Anything over $1,900 and we're looking at $1,950, which makes total sense. It's about the same range to the upside and to the downside if it were to break one way or another. So keep that in mind if we do see another leg up. But right now, again, it looks like it wants to consolidate sideways through time just based on the amount of green volume that's flushing in and the sideways sort of action that we have here. Nice day up, big gap down, but still remained positive on the end of the day. So That's what I would keep in mind on Amazon. Sideways through consolidation with support below at 1851. If we break out over 1900, we are looking for a longer term move up to 1950. Alrighty guys, that's going to wrap up this week's episode of the Weekly Watchlist. Again, the holiday weeks are over, so we should see some better volume start flushing into the market. If you enjoyed the video, be sure to leave it a thumbs up. It really does help me out, and I do appreciate it. Also, consider subscribing to the channel if you want to be notified whenever these videos come out. I've also been trying to post more videos about a diverse subject range, so if you haven't checked out the investing video already on M1, then go ahead and check that one out. If you want to see more about that type of stuff, leave me a comment down below, and I can certainly address it. With that, I wish you a green trading week and a prosperous 2020.